Board meet, and we're already picking up from our sources that the RBI has actually approved a dividend of approximately 57,000 crore rupees for the year. Remember, today was the crucial RBI board meet wherein they were going to discuss transfer of dividends, deficit monetization, and the central bank was also to consider steps needed for economic recovery and take stock of the financial sector. In fact, Ruchi is here. She's been tracking the RBI movements pretty closely. And Ruchi, it seems, again, just source space. We're still awaiting the official confirmation on the board meet, but it seems that a dividend of approximately 57,000 crore rupees for the year has been agreed upon by the RBI board.
Well, absolutely right, Aisha. In fact, my colleague Utkarsh is given to understand that the RBI board meeting that concluded just a while ago has approved a dividend of close to 57,000 crore rupees for this year, as against an expectation of 60,000 crore rupees that was earmarked in the budget from RBI dividend as well as dividend from other financial institutions as well. We are given to understand that this board meeting was a crucial one because it had to consider a dividend payout in light of the weak economic scenario after the Indian economy got hit by the COVID-19 pandemic. Remember, the government's fiscal math has gone completely awry. The revenues are pretty weak. The fiscal deficit only widening after the announcements that the government has made, and which is why all eyes were on whether the RBI, the central bank, is going to be the knight in shining armor. We're given to understand the board had to also discuss the issue of deficit monetization. What is the outcome of that? We still do not know. We are still not aware whether the call was taken on deficit monetization. But as we were given to understand that the call for deficit monetization or for the RBI to be a part and to fund a part of the government's fiscal deficit was being discussed in light of the falling revenue collections as well. In fact, this is something that we have seen various central banks do at various times. We're given to understand, and while this is only source-based, that the discussion regarding deficit monetization had to take place in today's meeting. We are awaiting a final word from the RBI, but there is a possibility that if not now, then perhaps, if this announcement is not made now, then perhaps at a later stage, at a later date, the RBI will once again be getting into discussions on this very critical issue. So far, the dividend that has been announced is in line with what was expected. As I said, the budget had earmarked close to 60,000 crore rupees in terms of dividend from the RBI. Last year, we did see a very significant amount of dividend transfer that happened from the central bank, and this was followed after the Jalan panel report. We saw a transfer of close to 1.76 lakh crore rupees, but the Jalan panel in their report had also said that any additional transfer should not happen until and unless there is an extraneous circumstance. COVID-19 definitely is a very different kind of circumstance. So, of course, the RBI board meeting had to discuss what is the path of recovery, how will the Indian economy come out of the COVID-19 induced slowdown, and also the kind of impact that it had on the financial sector as well. We will be awaiting to get a final word from the RBI, Aisha, but very significant developments coming in just in line with what the government had earmarked. The dividend that has come in is absolutely in line. There is no additional, there is at least source-based, there is no additional transfer that has been done so far. Maybe the RBI is looking to hold its ammunition for a later date. We're, of course, waiting to hear from the RBI. This information is only source-based, picked up by my, very esteemed colleague Utkarsh Chaturvedi. As we've been telling our viewers, 57,000 crore rupees will be transferred to the central government from the central bank.
Okay, Ruchi, what else is on the agenda? While, of course, the dividend payout was the main thing that everyone was looking out for, help us understand what else was going to be decided upon as we still await takeaways from the RBI board meet.
Right. We're given to understand, as I said, the board also had to discuss on the issue of deficit monetization, Aisha, we still don't know whether a call has been taken on this or not, whether the RBI will be the knight in shining armor, whether the RBI will come and help the government during these very, very stressed times. Having said that, as I said, the budgeted amount was close to 60,000 crore rupees. Last year, we did see a massive transfer of 1.76 lakh crore rupees to the government that was made for the year 2019, and that included an excess or a contingency reserve of close to 52,000 crore rupees as well. Having said that, we're given to understand the RBI board had to take a call on where things are as far as the recovery process is concerned, where things are with respect to the impact of COVID-19 on the Indian economy. You also heard the RBI Governor Shaktikant Das a couple of days ago saying that the NPA for the financial system may increase quite a bit, and which is why the RBI in their previous monetary policy had gone ahead and had allowed a one-time loan recast as well. So the impact of COVID-19 on the economy, on the financial sector was also something that was on cards that had to be discussed in this meeting. Having said that, remember, Finance Ministry has said that various macroeconomic indicators at this point of time are pointing towards things getting better in the economy. But still, given the fact that we don't have a vaccine, there are a lot of uncertainties that still exist for the Indian economy. And which is why one cannot take away from the fact that the government's entire fiscal math is in jeopardy at this point of time. Look at the government's fiscal deficit target as well. They had estimated close to 3.5% in terms of fiscal deficit for FY21. But when the year began, we were already at 4.6% in terms of fiscal deficit. There is an expectation that for the year, the fiscal deficit may inch close to the 7% mark. And even though this is a very different kind of a situation, the rating agencies have already kind of factored in a wide fiscal slippage. The big call had to be taken on whether the central bank is going to come in and help the government during these times. Will they do it now, or will they do it only closer to December or January? That's when we will have a clear picture on the economy. It's something that we will have to wait and watch out for.
We'll get back to you once the official takeaways from the RBI board meet, if they do come out.